The Schroder European Real Estate Investment Trust was launched in December 2015 to give investors exposure to a diversified real estate portfolio in growth cities in continental Europe. Those conurbations and regions that will grow faster than their domestic economies from a GDP, employment and population perspective. The long-term investment themes include urbanisation, demographics, technology and transport infrastructure. We use local expertise to identify sub-markets that will benefit from transport infrastructure changes, population enhancements, supply constraints, mixed-use areas, and areas in particular where rents are affordable and sustainable are central to the theme. The portfolio comprises approximately a dozen investments and a value of around 250 million euros. We're in winning cities such as Berlin, Hamburg, Stuttgart, Frankfurt and Paris. The portfolio is well diversified with a sector spread that includes approximately 50% in offices, 25% in retail, 20% in industrial warehousing and the residual in a mixed-use data centre.
So Seri invests with the objective of providing shareholders with a regular and attractive level of income, together with the potential for long-term growth in income and capital. Part of the delivery of the returns is the quarterly dividend paid by the company. This is underpinned by the long-term sustainable income that you get from owning a high-quality real estate portfolio and a diverse tenant base, and this delivers an attractive dividend, which is at a target yield of 5.5%.
So what makes a winning city? We think there are four key ingredients. The first is a diverse economy, both in terms of the size of companies, a good mix of large companies and startups, but also different sectors. The second thing we look for is a highly skilled workforce. That in turn usually depends on good universities and schools. Education is probably the single best indicator of urban success. The third element is good infrastructure. And that's not just about transport, it's also about broadband. Increasingly, given climate change, it's also about the resilience of cities. Can they cope with flash flooding? Could they cope with droughts, wildfires and so on? And of course that in turn really relies on the city council, having a city council with good vision that's imaginative, looking forward. And then the fourth element we look for is it an attractive place? Has it got a mix of new and old buildings? There are lots of cultural amenities. And when we look across Europe, we see these characteristics in particular in Berlin, in Hamburg, in Paris and Seville and Utrecht.
In conjunction with selecting the right winning city, we overlay our investment strategy with 6 mega themes. These are urbanisation, demographics, technology, resource and infrastructure, emerging markets and impact investing. As real estate professionals, we are actively looking to add value by repositioning assets, liaising with occupiers to maximise occupancy, capture market rental growth, and above all, utilise assets to their highest and best use. We have over 180 real estate professionals across the globe with a strong local presence in continental Europe. This not only gives us access to strong investment product, but also gives us local asset management expertise and know-how. Laurence and Niels from our Paris and Frankfurt office will talk you through individual assets and how we've utilised the mega themes in our portfolio construction.
Investing to benefit from the improvement of the infrastructure is no more evident than with the acquisition of the Saint-Cloud office building. At the time when we bought this property, in 2016, we had in mind that a new station of the Grand Paris Express project would be delivered at the foot of the building. With this in mind and the fact that the rents there are a third of what they are in the central business district, we made this bet on the attraction of this building for the occupiers and the potential growth in the rents. Retail and logistics are changing day by day. Our acquisition in Rennes allowed us to gain exposure to the fast-changing e-commerce sector. We bought this Grade A institutional warehouse logistics building with a long-term commitment from the tenant, an international fashion retailer. In addition to that, the tenant has invested massively inside the building with automated equipment such as high-speed conveyors and sorting machines. Our most extensive asset management initiative is the refurbishment of our office building in Boulogne-Billancourt in Paris. We have signed a new firm commitment for long term with the existing tenant, Alten, and it's a very good example of our in-house expertise of turning a Grade B building into a Grade A building with environmental certifications. This refurbishment is an important initiative that will provide the trust with the opportunity to grow, to get exposure to the winning cities, to enhance its quality, its covenant strength and income profile.
The investment that we did for SE REIT in 2016 was clearly picking up on the mega theme of rapid urbanization. Berlin has seen some very strong population growth over the last couple of years, with about 30,000 people coming to Berlin every year. We do expect that Berlin will hit the 4 million inhabitant mark by the end of 2030. So overall, I think the investment is pretty well placed. We have a huge plot of 40,000 square meters of land, and surrounding is a lot of mixed use already, residential, a bit of offices. So the future opportunities are just exciting for that kind of asset. With the scarcity of space in Berlin for residential and office in general, we do think that's a great opportunity going forward in one of the fastest growing cities in Europe. The asset in Stuttgart clearly has been acquired in view of the massive changes in regards to infrastructure improvements that are going on in Stuttgart at the moment. We have some massive improvement in overall situation for the city of Stuttgart. It is actually a project worth more than 8 billion euros, and it's being used basically to take the train tracks underground and create a new mixed-use area next to the main train station, and in addition also improve the connectivity of Stuttgart in general. The travel time from the main train station to the airport will actually be reduced from 27 minutes to only 8 minutes going forward. In addition, the connection to cities like Munich and Paris will also massively improve, which should actually benefit Stuttgart as a general business center. The asset that SE REIT owns is located directly next to the main train station in walking distance, and it's also neighboring the new area that will be developed on the train tracks, which is called Europaviertel. So therefore we very much look forward to the overall development of the area. We do think that it will have a strong drive on occupational demand and therefore might also benefit rents going forward.
These 5 assets provide a good sense for the portfolio. In addition to these cities, we have exposure in winning cities such as Hamburg, Frankfurt, Utrecht and Seville.
In terms of debt financing, we talk about the 3 L's: low leverage, long duration and low cost. And with gearing of around 30 to 35% net LTV and a total interest rate of sub 2%, the use of gearing is modest but highly accretive to the income return of the company.
The Schroder European Real Estate Investment Trust provides an attractive income profile and the potential for long-term income and capital growth. The trust is unique in being backed by exposure to purely continental European real estate that is diversified by country, sector and tenant type and packaged into a liquid listed structure. And we think this makes for a really interesting investment offering.